Okay, stock price is completely irrelevant to your analysis, correct? Keep that in mind. Irrelevant means unimportant, unnecessary, on and on and on and on, okay? The only time, if you're going to put anything in there about the share price or stock price of your company, would be in your final recommendation. You could say, geez, this is a really good company, but I think the stock price is a little high. You know, it's a little overpriced right now. Something like that I would accept, okay? But other than that, I'm not interested in the stock price. I just try to get you guys looking at it to build a little bit of interest, and hopefully you start looking at your company and seeing what's going on. And that's what we're going to do today, is spend a little bit of time looking at one company, one of your guys' companies. I said I'd try to do this with a lot of different companies, and so the one I picked I was looking at today was Erica's company, right? Disney? Who's Disney? Yeah, that's right. Who picked Disney? Didn't somebody pick Disney? Isn't Disney on our list? Yeah. Well, it could be. No, Aaron's got VFC. Logan's got, I'm not sure. Cat. Yeah. Brian's got Hog. It could be one of the online ones, so that's fine. That's a perfectly good one to pick. I don't know why I had Erica down for Disney. I just wasn't thinking. I'm getting old. My memory's no good. Sorry. Anyhow, we'll take a look at Disney. There's places, you know, that some of the things that I've asked you to do now, the history of the company, you're going to find by just doing a Google search or a Bing search or a DuckDuckGo search or whatever, right? Okay? You guys do know that's a search engine, right? DuckDuckGo? Or is it GoGoDuckDuck? I don't think so. It's DuckDuckGo, I think. So, anyhow, so you get past that, and the strategy, kind of the same thing. You'll probably find that in their annual report, right? But the financials, and one other thing. Let's go take a look at that. I'm going to have to shrink this up just a little bit, maybe, which is probably it's going to get too small here. But if you come here to this little down area, one of the things that I've asked you to comment on is the industry in which it competes. And it doesn't fit on here, but if you come to this down arrow and you look at the very bottom, it's just got all the same stuff that's across here, but the bottom one doesn't fit on there, and it's an important one to take a look at, okay? Because one of the things when you talk about the industry in which it competes, I kind of want you to tell me, where's your company fit? You know, is it the leader in the industry? Does it suck? Is it, you know, way at the bottom? Is it in the middle? Who are some of the industry competitors? You know, who are you competing against, right? Okay, there you go. You got a paragraph with just some of the things I just said. So I click on the industry peers here anyhow for Disney, and it answers a lot of that for me, right? Geez, Disney's the biggest. It has a market cap of $264 million, right? Much bigger than Comcast, the next, and twice as big as Netflix. Okay, which a lot of you guys probably have Netflix. I don't know. Did any of you guys sign up for the new Disney streaming thing? Yeah, Logan did. So yeah, okay. Yeah. Yeah, you know, brand new thing, and as I was doing a little bit of this research into Disney, I found it kind of interesting. I guess I don't know why I hadn't put two and two together before that, but I don't follow Disney very much, so it's kind of interesting, good to take a look at. But you come down, you know, and you get, you know, they got Liberty Broadband in here 3 times. I don't know why it'd be listed like that, but anyhow, an idea. Do you need to talk about every single one of these companies? No. You know, if you put all those in there, it'd take 3/4 of your paper, and then you wouldn't be able to tell me about the finances, right? But this gives you a pretty good indication or a pretty good source in order to write, you know, about the industry in which your company competes. And it's pretty simple. You know, should you maybe, if you got a couple good close competitors, should you maybe take a look at them? Yeah, what's wrong with going? Let's go take a look at the Comcast, right? See what it's all about. Okay, let's take a look at maybe a couple of them that are right there close by. Or if my company were down here, and there's nothing wrong with that. You know, small companies can still make a lot of money for you, right? In fact, a lot of times you'll do better investing in small companies over a long term than you would in big companies, right? So small companies can make a lot of money for you. But if your company's down here, maybe you want to take a look just at the big company. At least click on it, read a little bit about it, look at its finances a little bit, right? Take 5-10 minutes and kind of do a little background on that. It'll give you a little more perspective on what your company's doing as compared to what those companies are doing. Okay, so a little piece of advice there that should simplify that portion. And again, that's a relatively small portion, right? That should be a paragraph, maybe 2. Okay, let me reiterate again. Okay, I'll keep reiterating it. The financial analysis portion of your paper ought to be as long as all the other 3 portions put together, and maybe then some, right? Okay, it's a finance class. I just want a little background. That's what the other. Now you come up here though, and some of these other things are worth taking a look at. Okay, financials we're all kind of familiar with. We've taken a look at that. I guess I'll jump right into that. When I look at just this basic one here for Disney, I was kind of astounded. I go, 2018, their year end was 2019. It says preliminary numbers, so they haven't come out yet with their annual report apparently. But look at this. A little bit of revenue jump, a little bit of this and that, but I come down here to non-current assets and total assets. So that means that they bought something probably. Okay, and something that was fairly substantial. I mean, their total assets jumped up by nearly $100 billion. Okay, boom. I see that and I go, well, Disney didn't merge with anybody. I know that, and I knew this had happened because I've heard it in the news, but I'd kind of forgotten about it. So I just Google Disney acquisition 2019. Pops right up. It says, Disney acquired 21st Century Fox. Okay. Well, 21st Century Fox isn't Fox News or any of those things. It's not. It might have included Fox Sports. I'm not sure, but what is it? 21st Century Fox was a studio that made all kinds of movies and whatnot, right? Ding ding, bells start going off in my head, and I start saying, now they start their streaming service shortly after that deal got completed, right? So they wanted to buy that company to get that inventory of movies and whatnot, shows and whatnot that 21st Century Fox has done before they started their streaming service, because that makes it that much more valuable, right, for you guys as a consumer. So yeah, so I start putting those things together, and those are the things that really interest me, in terms of you guys doing a report. Okay, I've done that just by looking at some basics. Should you look at the bond issues? Yeah, you need to click on that for all your companies, okay? And there's a very good chance you're not going to tell me anything about it, but I want you to look at it for this reason. I clicked on that. It gives me a few bonds up here. This doesn't make a lot of sense to me here. Well, when I click on this more bond information, and make sure you read the entire user agreement, yeah, and then you can tell me about it. Click agree down there, and then it gives you a little bit more detail. Moody's, I don't know what the WR is for Moody's ratings. I haven't seen that before, but it's an A-rated company by the S&P. Okay, I'm done. Okay, that's enough. You might put one sentence about that in your report, maybe not. Okay, that's not terribly important. When would it be important? What's the limit, or what's the break for investment grade?
B-.
I'm not giving out any candy today. Come on, guys. Nobody knows? Guess I get to eat it. Triple B. Okay, triple B or better is investment grade. So triple B, then to A minus, A, double A, triple A, and there's double A minus and double A plus. I mean, there's just all kinds of weird, little nuances, I guess, to that. So Disney's definitely, rated investment grade. It's at least a notch or two above investment grade. That's fine. Okay, below that's considered junk. Now, if my company were only double B, or my company was just a single B, that means it's junk, right? Okay, then I better look into that a little bit, right? That's probably going to need to be some information about that. Probably needs to be in my report. okay? Because I got a company it's got a little tough time financing some things. Holler at me. Let's go take a look at it, right? Okay, if your company. I'm guessing most of your companies might be at least investment grade. Hog might not be. They've struggled a little bit, but they very well still could be investment grade. So, okay. So you take a look at that. Let me get, sorry. You go along up here, you had the quote, that's kind of what we're looking at now. Options, I wouldn't worry too much about. The profile you can take a look at, that'll just tell you a little bit about the company, nothing wrong with that. Key ratio, should you look at that? Gosh, I'm always asking you guys about ratios, right? What's the gross margins doing? And some of these you find on the income statement and whatnot too, okay, and probably in more detail on that. But nonetheless, it's kind of a nice way to look at some of these things, right? I get down here, I got profitability ratios, cost of goods sold. Well, that's gone up. Maybe that's part of the merger or part of the acquisition, right? Gross margin's gone down considerably this trailing 12 months. My guess is, when you read that report, you're going to find out that that's probably because of the acquisition, right? That they incurred a lot more expenses and those types of things. If you look at this key ratios, you can look at growth ratios. I had you guys calculate some of this, and look at that. Okay, 3-year average growth rate, 4.25. 10-year average growth rate, 4.62. That's on the revenue side. Here's one that's kind of interesting. Okay, here again is where I start tying things together, and I'd like you guys to start looking at that. So our net income, the 10-year average growth rate is 11.02%. That's wonderful, by the way. That's really cool. But the earnings per share, well, net income is just a product, or just it's a product of the number of shares outstanding and our net income. So why is the earnings per share growth rate higher than the net income growth rate? Anybody got a speculation there? Because they're buying back stock. Okay, they're buying back stock. And if I come, I thought it was one of these that had it on there. Debt equity, shoot, efficiency, it's not going to be, I think it's right up here maybe. Shares, yeah, shoot, it's right up here. Shares outstanding, right, and this is going this way. So started out 2014, we had 1.76 billion shares outstanding. We're down to 1.6 basically billion shares outstanding. So they've bought back a reasonable number of shares. It bumped up a little bit here. Okay, if I had to guess again, there's probably some of the sellers of the stock, the 21st Century Fox, that didn't want cash because that creates a lot bigger tax implications, and so they probably had to issue some stock, okay, so that the people that were selling could get stock instead of cash. Right? If you get cash, then you're going to have to pay capital gains on it if you had a lot of capital gains built up. But if you get stock, that's just a trade, and you don't have to pay any capital gains on that. So look at these. Okay, some of these you're probably not going to write a lot about. It could be if something really jumped out at you, a little bit concerning, but maybe not a ton, But take a glance at them and see if some things jump out at you. Their current ratio, quick ratio. What's current ratio? What's the quick ratio? You're dividing by your current liabilities, but what are your quick assets?
Like cash, inventory.
Yeah. Just goofed up. Quick ratio is current ratio, basically, except you take the current assets minus inventory. So not counting your inventory, and then divide that by the current liabilities. Okay, they call that the quick ratio then. Dang. Okay, it's a little bit of accounting. So, okay, so I look at the key ratios. Valuation. Again, this if it comes time to make your recommendation, you could take a glance at this. Ask me about it, maybe. This would tell you that Disney's maybe a little bit overpriced compared to the S&P right now. Yeah. Oh well. Price to books, pretty close. Price to sales, The problem with this is with this S&P, it's such a mixed bag. I don't know that you could really make that a great comparison. Okay, so I don't know that I'd spend a lot of time on that, but it's kind of interesting. Insiders is kind of interesting, see what they're doing. The filings, if you wanted a quick look at even your annual report and whatnot, it's in here. The problem is this is all, I think, in an HTML format, and so it's a little bit more difficult to negotiate or to get around in. Performance, kind of cool. Dividends and splits, it just talks about some of the things. But that's kind of cool. Nice little charts there. Look at that. Okay, so my point being is, spend a little bit of time. I think it'll help you just clicking on some of these up here. Some of them aren't going to be applicable. That's fine. Click on it, spend 30 seconds looking at it, and go on to the next thing, right? But some of these, like especially that the industry peers, it's really going to make it a lot easier for you. And the key ratios, spend a little bit of time looking at all of those because some of those might be kind of helpful in doing your report. Questions about that? Questions about the assignment? Okay, I'm going to sign off and I can answer other questions in